Good afternoon. I hope you all had a great Monday and a fantastic weekend. Today, the market started in the red, being down about 0.7%. However, it ended the day basically even, with the S&P 500 being flat and the Dow being down 0.45%. However, the tech-heavy Nasdaq finished the day positive by 0.78%, being positive for its sixth day in a row. Investors have continued to pile into tech firms whose businesses proved to be the most resilient in the age of the coronavirus crisis. Shares of Amazon and Netflix both soared more than 30% this year, while Microsoft gained 18%. Chipmaker Nvidia also hit an all-time high on Monday, bringing its 2020 gains to 37%. Quote, "Growth has been bulletproof in 2020, said Stefan Stuttmeyer, Bank of America's technical research strategist. Quote, "No change in leadership as the 2020 parabolic rise for growth versus value achieves the year 2000 tech bubble peaks. Markets will watch out for any cracks in the financial system and elsewhere in the economy as virus infections climb," said Mike Pyle, Global Chief Investment Strategist at BlackRock Investment Institute. Taking a look at the biggest positive mover in the S&P today, we start off with Cardinal Health, which rose nearly 7% in trading today. Cardinal Health is an American multinational healthcare services company and the 14th highest revenue generating company in the United States. The drug and hospital equipment supplier reported strong quarterly earnings and reaffirmed its profits forecast for the year. Cardinal Health had net income growth of 18% on a year-over-year basis. Revenue climbed to $39.2 billion, while consensus was $37 billion. The next biggest move up came from Vertex Pharmaceuticals. Vertex ended up 5% due to the FDA granting the firm their gene editing drug, a Regenerative Medicine Advanced Therapy designation, or RMAT. The designation will expedite the development and review process of the blood disease treatment. The stock taking the biggest dive today was Under Armour, an American company that manufactures footwear, sports, and casual apparel that had a burst of fame in the early 2010s. Under Armour finished the day down a whopping 10.51%. While reporting double-digit revenue decreases. North American sales were down 28%, while international sales were 12% lower year over year. Total revenue decreased 23% to $930 million, with about 15 percentage points of the decline related to COVID-19. The last company who took the biggest dive was Alliance Data Systems, which is a provider of loyalty and marketing services, such as private label credit cards, coalition loyalty programs, and direct marketing derived from the capture and analysis of transaction-rich data. ADS was down nearly 9% today, as the advertising and marketing sector has been rocked due to the decline in the amount of ad spending during the pandemic. They reported earnings nearly 3 weeks ago, missing earning estimates and experiencing a decline in net income of 80%. Total revenue for the firm increased by 4% year over year, though. The upside can be attributed to strong performance of the company's card services segment, which contributed 85.7% to the first quarter top line. Operating expenses increased 24.6% year over year to $1.2 billion, primarily due to the rise in provision expenses. For currencies, the US dollar gained on the sterling, as rising US Treasury bills have added demand to the US dollar. On top of this, investors in Britain are cautious about the reopening of the economy. Looking at the individual sectors, we see that it was a down day for everyone besides tech and healthcare. As healthcare companies are continuing to release earnings, this gain may continue, as healthcare is fairly immune, if not assisted, by the effects of the coronavirus. Looking at the table, per usual, we see that growth posted a green day. Value was hammered, especially small and mid-cap companies. Getting into earnings, we start with Simon Property Group, ticker symbol SPG, which is a real estate investment trust. It owns, develops, and manages retail real estate properties such as malls, outlets, and community and lifestyle centers. SPG was down 5% during trading today, but has regained some of that loss in after-hours trading. Simon Property Group is the biggest mall owner in the entire United States, owning around 200 malls. In the press conference today, they announced that they plan to have roughly 50% of its malls and outlet centers reopen again within the next week, as states begin to loosen their lockdown restrictions during the coronavirus pandemic. Chief Executive David Simon said, quote, "We are now leading the effort for these local economies to get back to business." Simon's quarterly profits fell 20.2% during the first quarter. Next we have Tilray, ticker symbol TLRY, which is a Canadian pharmaceutical and cannabis company. Tilray reported a first quarter March 2020 loss of 49 cents per share on revenue of $52.1 million. The consensus estimate was a loss of 44 cents per share on revenue of $49.7 million. Tilray's revenue rose 126% to $52.1 million from $7.9 million a year ago, while the growth was 11% compared to the previous quarter. In the earnings call, CFO Vertex said that like many cannabis operators, Tilray saw an increase in sales during March as people stockpiled cannabis ahead of stay-at-home orders in Canada. Lastly, we'll look at Novavax, ticker symbol NVAX, which is an American clinical stage vaccine company. Today in their earnings release, they announced an outside investment of $388 million to advance the clinical development of its coronavirus vaccine candidate. The company said that the vaccine it's working on, quote, shows strong potential to have a positive impact on this global health crisis. Novavax also reported a loss of 58 cents per share on revenue of $3.4 million, while analysts expected a loss of 70 cents per share on revenue of $1.7 million, a double beat by Novavax. Shares have soared immensely in trading today and after hours. Thanks for watching. I hope you all have a nice night.